by Fred. I see you here, the corner of my screen. I know Fred I just made the calculations, more than 17 years now. I'm very happy he is here. I was thinking, shall I make my introduction different as what I've written down? I want to introduce here my friend Fred Rowley. So I think I keep it this way. Fred has over 40 years experience in life insurance industry, and he has held a wide range of senior financial and general management roles. As a senior actuary, he has advised companies, boards, insurance regulators, and all of things. What is quite important in his CV, what I want to focus on, it lasted from 2007 to 2009, that Fred was instrumental in negotiating the CERA treaty, which was signed Hyderabad on Friday the 13th of November in 2009 in India. And this treaty brought together 14 leading actuarial associations worldwide to create the first credential for actuaries in enterprise risk management, CERA. And here we see the results today. We are happy in CERAVISION Congress in its fall. Fred was also elected as Honorary Fellow of the Faculty of Actuaries in Scotland, Membre d'honneur the Institut des Actuaires in France. He was the inaugural chair of the CERA Global Association, of course, 2010-2012, and he was president of the International Actuarial Association 2019. Fred is living in Australia, but he qualified as an actuary in the UK. He relocated in 1990, and yeah, he has done a lot of things. I'm very happy he will guide us through the panel discussion, which is about risk management in times of AI. And he will introduce the specialists, the experts, which we have invited for this panel discussion. Fred, floor is yours.
Well, I think firstly, thank you so much for the kind introduction, Ron. I think I will call upon the experts to introduce themselves. I don't have the CVs here with me. So if I could call upon, we're going to speak in this order. So let me call upon first Bogdan to say a few words to introduce himself, and we can go on from there.
Yes, hello everyone, and thank you, Ron, and thank you, Fred, also for moderating this discussion and for the invitation. So I'm Bogdan. I'm very passionate about AI. I would not call myself an expert, as this is a field which develops really quickly, and you have to keep up with it day by day. But I am a senior reinsurance actuary at Achmea Reinsurance in the Netherlands. And it's been a few years now that I'm actively engaged in different working groups, AI or non-AI related, at the Actuarial Association of Europe and International Actuarial Association. At the International Actuarial Association, I am chairing a work stream on adoption framework as part of the AI task force. And at the Actuarial Association of Europe, I'm vice chairing the AI working group and chairing the risk management committee. Which creates actually a nice combination of topics on how we manage actually AI, the risks associated with it, and how we have to adapt our profession. So I hope we can talk more about that today.
Thanks very much, Bogdan, and thanks for being here. Next, I'll call upon Yosuke Fujisawa to introduce himself.
Thank you so much for having me here today. I'm Yosuke Fujisawa, working for one of the big life insurance company in Japan as data science officer, in charge of setting the data strategy and AI governance and AI strategy and so on. I'm also a chairperson of the Enterprise and Financial Risk Forum of the International Actuary Association, as well as a member of the AI task force, working closely with Bogdan. And also, as a local association, I'm the chairperson of the AI working group of the Institute of Actuary of Japan. The last, but not least, I'm one of the first test qualified CERA in Japan. I'm happy to discuss in this panel today. Thank you.
That's great, and congratulations on that. Thanks very much. And next, Yuki Yeon, if you could introduce yourself, please.
Hello, everyone. My name is Yuki Yuan, and I'm based in New York City. And I'm currently working for Legal in General America as the head of actuarial audit, responsible for all actuarial data analytics and AI related audit for North America. I also teach data science as a faculty member at Northwestern University for the Master of Data Science program. Currently, I'm volunteering as the chair of the Professional Development Committee for the Society of Actuaries, and we are planning a lot more AI content, both online and in the live conferences. Very passionate about AI, happy to be here to discuss more about how AI can relate to the risk management and CERA. Pass back to you, Fred.
Thanks very much, all three. And I will say how pleased I am to be here, actually. I was saying just before we started that I've had a very long interest in artificial intelligence, and although it's been a long time coming, it's very exciting to see the new technology emerging in the last 5-10 years, and the fact that we're now getting to the vision that people had of artificial intelligence when I was a much younger actuary. So it's exciting. I look forward, as I'm sure that our audience does, to learning from this panel of experts. And without further ado, I think we'll move into the discussion. I think the theme to remember is that yes, it's a very exciting time, and there's an amazing, powerful technology coming upon us in ways that we don't control directly, and probably don't quite understand properly either. And it's our job as risk professionals to ensure that the risks associated with this technology are dealt with in a way that we can get all the benefits, but get them safely and ethically, and subject to all those other constraints that we'd like to see on behalf of our wider communities. So I guess the way we should start is probably that we should think about what we actually mean by artificial intelligence. What is AI? I know Bogdan's been working with the European regulations, and I'd be very interested to hear, Bogdan, any thoughts you may have about the definition that's being used, how the stakeholders understand and relate to that definition, and what we can gain from thinking about the definitional hierarchy that's embodied in the EU Act on artificial intelligence.
Yes, thank you, Fred. I think it's good to start with an understanding of what AI is, and what we've seen in the past couple of years, maybe as of 2018-19, is that most organizations worldwide reference the definition of AI to the OECD definition, which is internationally recognized. And I think it's a definition that captures pretty well what an AI system is. And as such, a few important aspects from these definitions is actually that the environment into which an AI system is being deployed or used into, and how that environment can be influenced by its outputs. So once outputs from a system are being generated, and the environment might change, and then new data is being collected, and again, with self-learning capabilities, an AI system can reproduce or regenerate a different set of outputs that might influence, again, the environment or the context is being used into. So I think here few aspects that are quite important and are still being debated worldwide, not only in Europe, is the adaptivity of the system, how adaptable they are, to which degree, and the level of the autonomy. So are they autonomous? Are they human operated or semi-autonomous? The definition does not necessarily specify to which degree the adaptiveness occurs, or to which degree a model should be autonomous or not, therefore leaving also some room for interpretation. I think what we see also in Europe is that the AI Act, as you already mentioned it, captured this definition pretty well with a bit of rephrasing, but essentially it's the same definition. And it refers to the AI systems as systems, as they are in essence, including also model within, including data input and outputs. And since the AI Act is a legislation is quite comprehensive, it was in force since 2024. One important aspect is to understand is that it's a cross-sectoral, so it's not only for specific sectors such as insurance or finance, but it's actually cross-sector, trying to harmonize and create a rule-based system that is understandable by all sectors. But that brings, of course, also challenges, especially when I believe most of us work in the insurance sector or financial sector, and it brings some challenges on how do you translate these legislations towards your sector. One AI system definition in one sector might differ or have different nuances as opposed to another one in other sector. And based on questions from stakeholders in Europe, based from reactions from different markets, the European Commission, which through its AI office is governing the AI Act, provided a bit more guidance on this definition. So maybe for actuaries to understand, I've heard before stories that many insurance companies and actuaries consider even traditional models such as GLMs AI models, but many more don't considering them as AI models, which is rightly so. So the European Commission brought up some guidance on that. For example, they wrote something about systems that are based on classical heuristics. So they have problem-solving techniques which rely on experience-based methods, and they provide approximate or efficient solutions, mathematical ones based on algorithms, but they are quite exact and well explainable. Those would fall out from the definition that the European Union is introducing or trying to cover with the legislation. Other areas are mathematical optimizations, where linear and logistic regression models are part of, or simple prediction systems, which rely on machine learning approaches, but don't necessarily have a strong self-learning capability. So they rely on basic statistical rules, and those might not qualify it under the rules of the AI Act. Then you also have the data processing systems, which are simply data manipulation aspects that, again, do not qualify. However, it's important to understand that the AI Act is a risk-based regulation, meaning that it also distinguishes between 4 risk categories. So the prohibited systems, which are not allowed to use or deploy or provide to the market, the high-risk systems, the general purpose AI systems, and then limited or minimal impact systems. So there is a different layering on how one looks at the system, and based on that, they try to bring a risk-based approach, and based on the risk approach, try to relook at the definition. So it's still quite challenging. These are just some indication, some guidelines that might apply in our financial sectors, but again, it remains challenging, and you as an actuary need to reassess constantly if your system that you're using or developing contains a model or not that might be part of it and might form an AI environment or not.
Okay, thanks, Bo. That's really interesting. And I think I'm going to call upon Yosuke to talk about how he's seeing the implementation of some of these AI models. But I know he has a couple of comments about the definition first, so I'll let him lead off with that and then talk about the most promising implementation angles from a large mainstream financial services entity.
Okay, thank you for that. And I wanted to start with a discussion about the definitions. And I think that this is very important topics for actuaries, and we are still learning what happens in Europe. And last year, Bogdan kindly provided the consent to translate one of the AI discussion paper, what was published by the European Actuary Association into Japanese. So we shared that discussion paper into our associations. Japan is a little behind of the discussion of the definition of AI, and this year, Ministry of Internal Affairs and Communications, as well as the Ministry of the Economy, Trade and Industry published AI guideline for business. So this is for business, all business. So that doesn't mean the financial institutes, but that's a cross-border application for the AI guideline. The aim of this guideline is actively and cooperatively develop a framework that achieves both promotion of innovation and reduction of risks across the life cycle by encouraging those using AI in various businesses to fully recognize AI risks based on international trends, including EU AI Act and stakeholders' concerns. And this guideline starts with the definition of AI. And it says it's ambiguous. There is no clear definitions of AI. But as Bogdan mentioned, we also refer to the OECD definitions as AI definitions. But there are some examples of the mathematical formula, including linear regulations. So I think which is very controversial, and similar discussion may be happened in the future in Japan as well. And I think the actuary should involve those discussions. What is the definition of AI and what's the difference of the actuarial intelligence and artificial intelligence? So those are the, I think, the Japanese perspective of the AI definitions. And moving on to the business applications, the Japanese FSA Financial Service Authorities published AI discussion paper this year in March, and there are several applications. So this is based on the survey conducted to the more than 100 financial institutions last year and summarize those survey results and published. And there are three potential areas for the AI applications. First is the operational efficiency. This is remains most widely adopted areas using, for example, AI OCR to make the PDF file to the digitalized information. Narrow AI and general AI are being used to automate documentation and summarizing and system development support using the coding support associated with the generative AI. So those kind of operational efficiency is one of the areas for the business applications of AI. The second is customer service is evolving rapidly. The companies are starting to deploy generative AI first internally to support staff by sharing the knowledge base and gradually for direct customer interactions, which is very risky areas for the insurance companies, but every insurance companies and financial institution should try to expand their customer services, which is directly to the customers. And third part is related to risk management, and most relevant for this panel, which is AI for risk management. This is gaining traction. For example, machine learning is being used to fraud detections, so which is one of the areas of our companies using AI. So across all these domains, the conversation is Japan is shifting from whether to use AI to how to use AI responsibly. Okay, that's my comment.
Stuck. Thanks, Yosuke. Sorry, my mute got stuck then. That's really interesting, and those I'm sure that those areas of activity actually extend beyond financial services. And Yuki, I know you have experience in advising clients in different sectors outside of finance. Can you say anything about how you'd advise your clients in areas like healthcare or logistics to avoid some of the risks associated with the new technology and the implementation of AI?
Yeah, definitely. So when it comes to risk management, I'm seeing this, the trend is there's more the advice to the internal stakeholders is getting more like industry, sector, or product specific, but principally aligned. So here are some 4 universal risk pillars when I think about AI and risk management. So the first one is model and algorithmic risk, like how decisions are generated, validated, and monitored. And then the second risk pillar is data risk, such as privacy, representativeness, and security. And then the third pillar is operational and cyber risk, such as business continuity or third-party and vendor exposure risk. And the last pillar is the ethical and reputational risk, such as bias, fairness, transparency, and explainability for AI. So if I go into a little bit more specific examples, in terms of finance, like some of the key risks are like model bias in credit scoring, or maybe claims automation, or some investment algorithm, and how do you explain and be accountable, and data privacy laws according to like the federal or like the state level. And if it comes to thinking about how to advise both internal or external stakeholders, think about how does your business align the AI governance with all the regulations that has been published and approved in your jurisdictions, right? In the US, we have like SR 11-7 or the NIST Artificial Intelligence Risk Management Framework. You also want to ensure independent model validation, bias testing, and monitoring the model drifting. And also another key component is requiring clear human in the loop. Like by that, we mean like maybe actuary or like the risk managers being part of the AI pipeline and deciding the controls for decisions that could affect like both external customers or internal stakeholders. And also advise like disclosures to regulators or clients when Gen AI tools are used in an advisory or risk reports. And then another things I'm seeing more regularly in life insurance is really like the automating underwriting, and it may cause bias, right? When they're using predictive or Gen AI models. And also, again, compliance risk under state insurance departments or under the NAIC principles on AI governance. So in terms of actuaries practicing in the US or who are members of the SOA, so there's certain ASAP, the actuarial standard of practice, that we want to adhere to, right? Like the ASAP 56 on modeling, or ASAP 12 for risk classifications, or another ASAP 43 for communication, just to make sure all the assumptions, input, outputs are documented and explainable. And also want to embed like fairness and bias testing in model validations using a risk-based proportionality principle, like such as when a model has higher consumer impact, then it will require stronger governance. And also, I also advise the internal stakeholders to start thinking about the AI governance, setting up committees or the terms of reference, or have the policies in place. And you don't have to get it right immediately, but you need to have some policy so people know what is acceptable or what to do or what not to do internally. Yeah, and also being a internal auditor working on the third line, so definitely second line for the ERM, work closely with internal audit when advising on AI governance and relevant matters.
Okay,
so I'll pass it back to you, Fred.
Yeah, thanks, Yuki. That's very helpful, and some interesting examples of the things we have to comply with as we're managing those risks. I know Bogdan has some views on the way in which governance systems can be implemented, and you know what we should be looking at for, and because the aspects of model governments that we've been used to with the as we might call the normal actuarial models is very different from, perhaps might be very different from what's required for AI. I'd be interested to hear his views on on how that works out, and what's the best way to do it as well. How do you relate to your stakeholders?
Yeah, thank you, Fred, and thank you, Yuki and Yosuke, for your opening remarks. I think Yuki already mentioned some of the risks and the pillars that are very important when implementing or using AI. And I think those are really key pillars that need to be respected from a model lifecycle point of view. I think from the existent actuarial governance, there are many elements that can be used, since we are many of us implementing on a daily basis the 3 lines of defense that we have in our organizations. However, I don't think they are complete or enough to combat all the risks associated with AI, or to actually extract all the opportunities and benefits that AI brings to the table. But it is a good start. It's a good start to rely on existing model governance frameworks and model governance policies within the organizations, which describes different roles and responsibilities, and those can be extended further on to other disciplines and other roles as well, to ensure you capture everything that AI brings with. Based on the mentioned pillars, and I think the risk identification within an organization is very important. It's important to look at what types of risks, as already mentioned, there are there, and how these risks exhibit themselves when a model is being implemented, let's say. And again, I'm using model and system interchangeably here, but let's say that we are just discussing an actuarial model that has self-learning capabilities and a certain predictive power and accuracy. What type of risks that AI model brings with, and what you actually see from the being implemented in the algorithm building phase already for quite some time by whether data scientists, IT professionals, or actuaries, are those DevOps, machine learning ops, and CRISP machine learning models, which are essentially nothing else than a representation of a life cycle of how that model evolves from the data collection to deployment, training, refitting, fine-tuning, developing a model, and then testing that model. And once it's being deployed within an organization, you actually have the opportunity to monitor and operate the model based on the stakeholders' needs and the business value that it creates. So you can see it as an infinity loop. And it starts with understanding the data, the business. It's going through the model development phase and then to the model operations phase. So it's a cycle that is dynamic. And as compared to a traditional actuarial model, while you have a data set that is always pretty deterministic, then you have the model and then you have the output. You don't need to reassess the outcomes of the model, since they are very simple and explainable, and they are meant for a certain purpose. But now, since you have more complexity through your model, you really need to do this in a cycle, or have a life cycle, which is at a higher frequency than before. Maybe on a monthly basis, maybe based on data changes, which are quite important, not to introduce bias and to remain fair with your algorithms. So the governance of models and the implementations of AI brings additional complexities, and requires also actuaries to work interdisciplinary. I think that's also essential. We cannot know everything in this life cycle that I just described. But if we work with more disciplines and we understand very well the roles and responsibilities within an organization, again, an organization might assign them differently than another, but they need to cover rightly the aspects of an AI model. I think we will be more successful in deploying AI systems or models within our organizations. Yeah, I'm not sure if I should go now into some of the risks and pitfalls or things of concerns, but my first remarks would be the extension of existing governance policies towards the new, more adaptable ones.
Yeah, I think that's very takes us forward a long way, and I'm just thinking back. I think I'd like to look at some of the individual particular risks that affect financial institutions. I'd like, Yosuke, I know you've got some experience of implementation, and one question would be, how do you get, with AI systems, how do you make the systems transparent and to preserve the accountability of the individuals and the organizations who are deploying these systems? Which particular risks in the finance sector do you think your comments would apply to?
Okay, thank you. Thank you for your comments. According to the AI discussion paper published by the Financial Services Authority in Japan, there are 3 types of risks associated with AI. And so narrow AI and generative AI. So narrow AI is a kind of machine learning model. It's a traditional AI, while the general AI is generative AI like a ChatGPT, Claude, and so on. And the discussion paper explained 3 types of risks. And the first one is the existing risks, but the second one is amplified risks associated with generative AI. I think the majority of risks is categorized into this one, like explainability, fairness, and bias, and privacy and security issues. The third one is new types of risks. It's kind of an unknown risk for the insurance companies, like hallucination or malicious usage using the generative AI. So those kind of new risks is areas that every companies should deal with in the near future. And going back to the governance discussions, like Bogdan and Yuki mentioned, and I think this part is also challenging and still looking for the best practices, how to set the appropriate AI governance for the financial institutions. And one of the reasons is related to the first discussion about the definition of AI. It's very difficult. What is AI? To define the AI governance for the companies. So without clear definitions, as a kind of shadow AI, it's like a shadow IT issues will occur. Like in order to implement generative AI solutions, we would need to rely on third-party solutions, which is a source of the outsourcing risks, whereas operational risk management is important to manage. So those kind of new areas is very important to manage for the risk managers and actuaries as well.
Yeah, thanks, Yosuke. That takes me towards thinking more generally about what types of governance systems work well. Maybe we can get a US view from Yuki. Let's look at the general level of what kind of governance frameworks works well. I mean, I'd be very interested to hear what Bogdan has to say about the pitfalls. But before we have the pitfalls, let's work on how the system ought to work.
Yeah, thank you for the insight, Bogdan and Yosuke-san. So as far as I'm seeing in the US, so maybe I can go a little bit more like on a very practical level. So always at the beginning, right? Everyone block all the like ChatGPT or even Copilot, and then now more and more employees in companies are using Copilot. And what I'm seeing is you just have to maybe like at the beginning, maybe not everyone in the cohort like can use the Copilot. You can have a test group first, right? Like a pilot for Copilot, and then just get the feedback and see any like concerns or risk from a bottom up, like more on a grassroots level. And then when it comes to applying Gen AI into systems within an organizations, one thing I've seen is like some companies, they will set up a AI task force or committee to screen or like have people apply use cases. Like let's say there's a claims department, they want to use some Gen AI software to automate some claims process faster. So they cannot just go out and do that. They actually need to apply internally and get pre-approved by that AI committee. And within that AI committee is a cross-functional team. You have AI, you have tech, you have people from like various business to figure out like what is the best solutions. Like, is it just using a external vendor will be the best suggestion, or is it building it in-house with other tools that is available within the organizations, like the Power Platform within Microsoft? So it's just things like that. I think every use case for Gen AI is unique, and because it's still emerging and there's always new features of Gen AI coming out, I really think as a corporations, really need to take an inventory of like what people are using Gen AI for and which one require more governing or which one is an approved use case and which one is not, just so you get the transparency across all levels.
Great, that's very, very helpful, and it takes me. I'm going to go back to Bogdan asking him about the pitfalls, but I think one of the pitfalls must hang on how we relate to our stakeholders, in particular boards and the C-suite, and the communications that need to be done around that. But if you can add some value in that area, Bogdan, please do. But let's hear what you think the pitfalls are with implementation.
Yeah, I think in generally speaking, I mean, we touched upon also the narrow AI perspective, which often is being seen in the actuarial world. And Yuki, you mentioned the Gen AI implementations within organizations, which I can fully resonate also from practice. I think when related to different stakeholders, it's all about common understanding in the end. And most of these models, whether Gen AI or narrow AI, they tend to be quite complex. And you often see many stakeholders calling, whether those being from board or executives to any type, really. You see them referring to these complex models as black boxes. But in the end, it's also about the understanding and how you apply them and how do you actually ensure that together with your stakeholders, the communication is done properly, and also that you are implementing enough guardrails within your organization to ensure the good operation of that model. So, of course, one area that is continuously researched is the one of explainability. And I think it takes efforts from all stakeholders' sides to understand what actually explainability and transparency is in the context of AI. One actuary that develops model or builds algorithms might understand pretty well and see the pitfalls of certain explainability methods for that specific model. However, one stakeholder, whether that being a regulator or a board member or any other person from the IT department, let's say, might not understand pretty well those methods that are being created or used to explain the models. So we see, or at least slowly in the market, that there are a set of explainability methods that are used and are more and more understood by stakeholders. Think of the global model agnostic methods such as partial dependency plots, or local model agnostics such as the Shapleys of this world explanation variables, both looking at different things. Some look at individual data features and how they impact model output. Some look at specific marginal effects of features on the output as a whole. But they are different and they are quite understandable, but many of us as stakeholders need to understand them collectively and refer to them as being as having same definitions and views on what their pitfalls are and not. So I think these are growing and are becoming more and more relevant, but a lot still needs to happen in terms of how we communicate and how we create multidisciplinary team to be able to understand these models. Another area of concern, especially in the Gen AI sector or in the Gen AI environment, is that many of the large language models that we are using, whether being under a co-pilot or under any other internal company implementation, do not necessarily provide or want to provide weights, to how the models are being built and how the output is being generated. And by weights, I mean purely between the neurons in the networks. So how, based on a certain information, a certain output is being provided. You see often that those are somehow hidden, and therefore the black box effect. And I think companies can do a bit more to understand and validate Gen AI models than what they are doing now by simply using them. But slowly, things are improving, so we should be aware of that. All these pitfalls that happened in the beginning, that, wow, that large language model gives us that answer, but we don't know how it came to that answer, are being now tackled by building guardrails, by validating them maybe one against another, for example, by creating the retrieval augmented generation methods. So you kind of use augmented intelligence instead of artificial intelligence to have more understanding on the results that are being produced, to use the right data sets and context that is needed for that model. So pitfalls can be tackled, but there are still a lot. And again, I think communication is very important among stakeholders, whether being with the regulator or internally among internal stakeholders.
Yes, thanks, Bogdan. That's just what I wanted to hear. We're going to move on in a moment to talking about using AI for preventative mechanism, and perhaps also for defenses against malicious actors who might be using AI against us. But before I do that, we don't have any questions yet coming directly from our audience. So it'd be great if we could have some of your questions so we can direct the discussion to the areas you're really interested in. Time's moving on, so get those questions in now, and we'll fit them in towards the end of the session. I'll ask one other question, which is if you can make suggestions as to what the CERA Global Association can do to help you in your pursuit of AI and the risks associated with it, then please feel free to do that as well, either during this session or afterwards. So let's move on. I was interested to see that AI systems are being used widely in the audit context. I wonder if you could just say a little bit about how that works and what's typically involved. That'd be very helpful.
Well, when it comes to audit, internal audit, the third line of this defense, well, I recently came up with this thought. It's kind of like, if by the time when internal audit comes in and look at things in your area and something is wrong, I think it's a little bit too late, right? Because for internal audit, typically, I mean, maybe I work on 4 to 5 audit each year. So it's impossible for me to know every single department, their risk and control, like, are they effective or whatnot? So by the time when I come revisit your area, maybe it's 5 years from now. So it'll be too late. So I would say the burden on like Gen AI governance and proper risk and control is really set on the first line and the second line, especially the risk management area. And I say like when I'm like in auditing for department that could be using data science, predictive analytics, or Gen AI, I always look at like do they have an existing policy in place, or have they revised their existing policies with that is relevant to Gen AI right now, and how do they encounter all the new risk come up with the Gen AI, and because usually if they have not really think about all these, then that means most likely the team members are just going they are just pretty much no rule, no guardrails, like Bogan has mentioned earlier. And so from my auditor perspective, I think that's like significant findings. But yeah, I would say definitely like second line and third line has to work like very closely together when it comes to Gen AI governance, given it's so new and it's keep changing. So yeah, I hope that's helpful.
Yeah, that's helpful. If we could move on to the malicious actors, it seems that the bad players who are trying to use AI against us always seem to be able to move quicker than we can in defending ourselves. And just staying with you, Yuki, for a moment, how would you say we can protect ourselves best from malicious actors using AI tools against us?
Well, first of all, I would say definitely if there's any like corporate IT or phishing training that or annually, you definitely need to like complete those because usually the IT area they have more like up to date on the latest like phishing or social engineering techniques, right? That can trick you into pressing the email or like click on the links and stuff like that, right? But also another thing that I've been looking at is so in terms of Gen AI, there's something called prompt injections. So let's say you created your own custom GPT, but actually someone can go in and enter a prompt that put in new logic or even sometimes like programming logic that can erase all the customizations that you have built and let your ChatGPT just giving out gibberish, so to speak. So I always caution, like when it comes to building your own customized Gen AI tool, just look up like how to prevent things like that, or like after you build your own tool, see if you can break it yourself, like in what conditions that your customized LM model or tools would just stop working. So I think those are the things that I will pay more attention to. And just because it's so easy to build like a customized Copilot or GPT nowadays, but I think people may not spend enough time to understand or in what conditions that this will break. I don't think people test it enough.
Sorry for the breakdown, trouble with my mute button again. And yeah, thanks. That's interesting. And we have had a question about from the audience about practical examples. Is it possible to give a practical example of where we've seen AI in use in the field and something about the risks associated with that and how to mitigate it? I'm tempted, given Yosuke's job description, inclined to ask him that question. Can you tell us something about an actual implementation and what's involved, risks?
Yeah, this is a good question. And from a risk management for the customer perspective, we developed kind of prevention methodology for the clients to make people healthier. So our company can access to the, not only traditional insurance data, but also wearable devices like a number of steps and the heart stroke and so on. So using those data to develop the machine learning model to score the health status and provide those results to the customers with the apps. So those are the risk management from the customer perspective. And from the insurance perspective, so we are still discussing how to use AI for risk management purposes. But one of the example is application for the emerging risks or scenario setting. So using generative AI to come up with a lot of scenario or to look at look for the potential emerging risks. That is more efficient, not using just using the generative AI or RAG, retrieval augmented generations, like Volkan mentioned. So those kind of efficiency to set the scenario or look for the emerging risks instance is a potential area for the AI use cases.
Okay, thanks, Yosuke. That's a good example. And I'm going to get another question from the audience. So far, we've focused on risks relating to the use of AI most of the time, but let's turn it around. Are the risk managers being negligent if they don't tap into the various AI tools to get the AI insights on specific risk management topics they're facing? Of course, even that has its own risks too. So there's a circularity, but let's turn that question, follow that question through. It's a good one. Is where can we use, where should we use AI tools to help us with risk management?
As Yosuke was talking about some of the practical use cases, so one of the potential idea that I'm going to ask my risk management peers at my work to try out is, so there are quite a few AI risk management framework in the US, and then they are like many pages, right? And so I wonder if we fit those regulations and then ask, let's say, Gen AI to compare the existing risk policy within the organizations. And I mean, of course, you kind of need to read it and understand like both paper or multiple papers too, and then see if you can come up with any improvement suggestion for your existing policy. And just because it's just, I mean, most likely you will have your own perspective, like how to enhance your existing risk management policy internally already. But this is just to get another perspective or maybe things that you missed, just because of just a sheer volume of pages that you have to go through, and we don't have enough time of the day. And also, like, as you are asking any of the GPT or any model to give you the answer, ask the model to give you the rationale and the justification of why it suggests certain things that way, and give you the hyperlink so you know exactly what it is exactly referring to. Because a lot of times the model, right, will just infer or like make things up, and then when you ask, oh, where did you where did you come up this idea from? And they're like, oh, no, nowhere. And I say, do not infer from now on. So yeah, so I think that's one of the good use case for risk management, especially there's just so many regulations that a person has to go through, and it's a lot of interpretations. So yeah, definitely, I think that I will ask my risk management peers to try that.
Okay, thanks, Yuki. Bogdan, any thoughts to add to that?
Yeah, I think it's quite a great idea. Thank you, Yuki, for mentioning it. Also, maybe extending that. So not only like within organizations, we have, of course, the access to all the data and documents that, whether policies or whatever they are, that are open somehow to our own large language models, co-pilots, and they can provide answer, but it might be also wise to hold this answer to a certain extent to external web data and market practices to some extent in a safe manner, of course, and in a data protective manner. I think that can help also distinguish different or new set of risks. Now, if I think of risk management topics, I don't necessarily think always of how we apply risk management frameworks to deal with our risks, but also at how we identify new risks that are present in the market. And Yosuke mentioned really well the emerging risks that are popping up a lot now. One of them being also the digital concentration risk. This is also one risk that is seen by many peers in the market and international organizations as a geopolitical risk. Again, a topic that interests us a lot as actuaries. And digital concentration can be very harming for organizations if over-reliance on certain parties happens strongly and without any good risk management practices in place. So I'm not saying you should not over-rely on one party, but you need to rely with the right risk management practices in place. Other areas that I think of the risk management topics, except the whole new emerging risks, are how actually risk managers, actuaries, underwriters can AI or tap into AI to identify new methods to increase insurability within the market. And you see that by using different data enrichment methods. You see that especially in the climate risk insurance sector, where the protection gap is still a very relevant and problematic area. The protection gap, AI might help us to reduce that protection gap through data enrichment methods. For example, using a chain link methods to link real world data, social media, web data, or weather data to insurance specific data for your products. So in that sense, those topics can become more and more relevant and also can bring additional risks, you know. So we already know about the data risks that we are facing and data that we feed those AI systems with. But we need to take more care about the hidden proxies that are coming also with this data. So I think by tapping in different methods, in innovative approaches, one risk manager or one organization might come to realize that actually once using AI, you face a different set of risks and they can help you combat different problems, but you need to be aware of those problems and risks that you are facing when using it. So that those are some of the remarks which span across multiple, of course.
Yeah. Thank you very much, Bogdan. I liked your last sentence there about these problems associated with AI and the benefits you're going to get. That's where we started this session earlier on, and it's a good point to close. I think we're running out of time now. So on behalf of our audience and on behalf of myself, let me thank our three panelists for a very comprehensive overview of what's going on in the AI space, how we deal with the risk, how we mitigate them, and how we can defend ourselves against some of those people who use AI against us. We could go on for hours talking about this. I'd love to see more on regulation and on practical applications, but it's been a great session, and thanks everyone. I think we're going to go to a break.